So the question we get quite often, very often from business clients is, should I park my business cash reserves against my home loan? The idea in principle usually makes sense because when you've got money in a business cash account, it doesn't earn much, if any, interest, especially in this very low interest rate environment. The idea then is to take the business cash and park it against the home loan, so that you save interest on the home loan until you need it for your business. So I'll probably address this question usually in kind of three legs. The one is, can you actually do it? Should you do it? And if you do it, how do you go about it? So whether you can do it or not really depends on your business structure. And the rule there is, if you run your business through a company, so if your company is actually the trading entity, then you have to be very careful taking business cash in and out of the business. And I don't want to make it really complicated, but it can trigger the Division 7A loan rules, which you have to be careful of. So most of the time when somebody operates their business through a company, we don't recommend for them to use their business cash and park it off against their home loan until they need it again. For clients who use trusts or sole traders, partnerships, those kind of things, so in principle, yes, they can do it, and usually there's no kind of complication in doing it. Having said that, most of the time we recommend that clients don't use their business cash and offset it or park it against their home loan. And the reason for that is, the real reason why you've got business cash reserves is to support the business, and to be there if the business needs it. And in behavioural finance, we really call it mental accounting. So there is a difference in your confidence in actually having cash in your business compared to having to draw against your home loan if you need it. So psychologically, it makes a difference. So and the other real principle is kind of keeping business money separate from your personal money. So often, we find for clients who do in and out, of their business against their home loan, business money and personal money gets mixed, and it's not good for overall business management generally. So usually we don't recommend it. We've got clients who do it. We've got lots of clients who don't do it. If you are going to go ahead, obviously not trading through a company, but you use a trust or some other kind of other business structure where there's no problem with doing it. If you are going to do it, then we would just always suggest that you use a home loan offset account instead of a redraw facility. There was a recent case of a bank, which will go unnamed, where clients had money parked in redraws, bank's clients, and they kind of cut them down. So you want to make very sure that you can actually access your business's cash if and when you really need it. So yes, in most cases you can do it. We don't recommend it in most cases, and just be careful how you go about it.